Ever wonder what it'd be like to wake up to find all or part of your savings just totally gone? Funds that you thought were safe inside the bank that you worked hard for just seized. No court order, no vote, just regulators stepping in to save a bank. Unfortunately, this is not a hypothetical situation. It is a mechanism that banks worldwide have implemented, and they're just waiting for the next financial crisis to roll it out. Today, we're going to break down exactly what a bank bail-in is, how it actually works, who it truly affects, and the serious fairness issues that should concern every depositor, investor, and business owner. By the end of this video, you'll understand precisely how your deposits are at risk and what steps you may consider to help protect yourself. This is not just another dry financial topic. This information could directly impact your financial security. So let's begin with a clear, structured explanation. Basically, what a bank bail-in is the ability for a bank to seize assets. Now, in return, what they will give you is shares in the failing bank, which are sinking, and you might not even be able to get rid of them. And we have the bank bailouts, and how that differs is that the government bails out the banks, and they're using taxpayer dollars. Now, the taxpayers didn't really like that, but they want to shift that burden onto the savers. Now, the people that are going to pay for these are going to be the shareholders, unsecured depositors or creditors, I mean. So that would be savings, checkings, CDs, mutual funds. All these could take quite the haircut. They say this will just affect large depositors, bondholders, and investors in bank debt, but I'm just totally not buying that. They claim that the FDIC will take care of your accounts that are less than $250,000. Now, there is a problem with that. And that problem is that the Federal Reserve has like less than 2% of the cash on hand. So if all the banks failed, the Federal Reserve, I'm sorry, the FDIC will not be able to meet their obligation. This has already happened in Cyprus in 2013 during the country's financial crisis. Now, they had limits on ATMs, and anybody who was above the 100,000 euro cap on that took a haircut of 47.5%. And that was just basically seized. And to the best of my knowledge, it has never been returned. Unfortunately, I think that this seemed to be a test run. Or now the purpose of this is what they say is to reduce a moral hazard, meaning they're not going to take money from taxpayers. Instead, they're going to take it from hard-earned money saved for people that may be doing without so they can have something. So basically, the people that spend all their money doesn't affect so much, but the people that do the right thing, it's really going to hurt. Now, there's a lot of concerns being raised against this. People are going to lose trust in the banks, and when that happens, there's going to be bank runs. And that's a train that's going to be hard to stop. And imposing these losses on depositors, it can feel like a violation of trust. I mean, we've grown up to trust banks to take care of our money, even though they pay us next to nothing insurance. And if you look at the history of central banks and the Federal Reserve, I don't trust it. Let me ask you, do you think they'd ever create such a regulation if they didn't plan on using it? Unfortunately, there's not a whole lot of things you could do to combat this, but there are a few things. Now, keep in mind that I'm not a financial advisor. This is just my opinion, and this is for educational purposes only. Do your own due diligent research and learn how to research. But some of the things that we can do is invest in gold and silver. Another one is invest in Bitcoin. Another one is to invest internationally. And then also consider leaving the United States. But if you do the research on the countries that are more safer economically. If you want to know more about other countries and what BRICS is doing to the United States, check out this video up here. Thank you for watching.